Hi and welcome to the Core Finance Master Investor Show. My name's James Faulkner. I'm joined by Victor Hill.
Good afternoon, James. Hello again.
How are you doing, Victor?
Very good.
2016, the oil price pretty much collapsed to below, I think it was below $30 a barrel at one point.
January 2016, correct?
Yeah.
Yes.
Since then, we've seen a decent recovery. I think it's back to just over $60 at the moment.
It's 65 right now, I just checked.
What are the prospects for the oil price going forward? Will we see further recovery, or are the days of $100 a barrel, are they behind us?
Well, I don't think we are expecting $100 a barrel for quite some time, if at all. I mean, Bob Dudley of BP is pricing in their earnings forecasts at an oil price of between 65 and 70 over the course of the next year or so. So that's the kind of range that the industry itself expects. But what's happened is that we don't foresee any softening of that price. So the oil price, since I first visited this sector in a magazine edition of exactly 1 year ago, the price has recovered and the economics of the oil industry have been transformed. And that puts into perspective the relative advantages of fracking as against conventional oil recovery.
You've been very critical of fracking in your article, but wasn't this the technology that was supposed to provide cheap and plentiful oil for years to come for everybody?
Well, a lot of people were very exuberant about fracking and thought that it was going to transform the industry completely. And there's no question that in the United States, it has succeeded in increasing output very substantially over a relatively short period. And it was supposedly a cheaper form of oil extraction. Now, all this has happened relatively quickly. I mean, fracking, as I mentioned in the article, has been around since 1947, when Standard Oil first used it in Kansas. But fracking as we know it now really only came about since the late 90s, and it's only been rolled out on a large scale over the last 10 years or so. And yes, it's true, America has now regained its position, or is about to regain its position, as the #1 oil producer, and will probably surpass Saudi Arabia and Russia over the next year, and that is partly due to the fracking revolution. Now, you know, it's all very well criticizing fracking, but there's a lot of concern being voiced within the oil industry itself. And the main concern is obviously environmental, but there are also economic factors as well. So would you like me to go through those in turn?
Yeah. Sure.
On the environmental side, the main issue is, of course, the risk of aquifer contamination. So the actual fracking process takes place well below the water table, but fracking involves the use of quite toxic chemicals as well as sand, which can in some cases permeate through the shale in vertical faults. And there is the risk, if not the actual experience, of contamination. And because it's early days, because this is a relatively new technology, we don't really know how long those chemicals reside way down in the rock substructure. And a lot of people would suggest that we're actually holding a hostage to fortune here, in that we could end up with severe contamination down the road. The second point is that this technology uses an awful lot of sand. And you might think sand is a kind of a, pretty readily available commodity. But some of these wells have used up to 14 million tons of sand. I mean, that's a very big sand pit. And we're actually running out of sand. And it turns out, not just the environmentalists, but some of the analysts within the industry reckon that this is going to be a significant capacity restraint on the growth of this industry. And indeed, it does have very severe, sand mining does have very severe environmental impact. So as the price of oil has recovered, there has been increased interest in exploration using conventional extraction techniques. And the name of the game now is to reduce drilling costs as far as possible using technology.
That said, we've had the poisoning of the ex-double agent Sergei Skripal in Salisbury recently.
Yes, we did.
And that's brought into sharp focus Britain's reliance on foreign imports of natural gas.
Yes.
From, among others, Russia. Now, Britain only, I think, imports around about 5% of its natural gas supplies from Russia.
That's right, yes.
But the fact that Britain is now a net importer of natural gas does raise the issue of energy security.
It does.
Shouldn't we be looking at fracking, and along with all the other energy sources, to ensure that the UK has a secure energy policy in the future?
Well, my own view would be that we should not discount the importance of fracking, and that probably some licenses will be granted for fracking to go ahead. But I don't think it's going to be the energy bonanza that it was envisaged to be back in 2011, when Quadrilla Resources first started to extract shale gas up in Blackpool, in Lancashire. And there are a number of reasons for this. Firstly, there was this controversy over the seismic activity. But there's a report has come to light through the Freedom of Information Act just recently, which suggests that, in fact, the viability of shale gas in the UK has been overestimated, and that in any case, in a very densely populated island such as the UK, you cannot really just take the risks and commit to these very long lateral boreholes that have been experimented with in the United States. So I think we have to look at it as one part of the energy mix. And then what has also happened in these 7 years since 2011, when this first came onto the agenda, is that the cost of renewable energy has fallen quite dramatically. And as you know, James, I wrote a number of articles last year about renewables, and I was looking into the economics and the viability. And it does seem, I think we are persuaded, that the price of renewable energy is going down. Apparently, last month in February, during the big freeze, there was one day when most of the UK electricity supply was sourced from wind power, which is quite a watershed. So I think a lot of people would argue that the game has changed since fracking first came onto the agenda.
So the energy markets are in a state of flux at the moment. It's difficult to see which way things are going to go. How do investors position themselves given the current state of affairs?
Well, I go back to the advice I gave more than 1 year ago, which is that we should be looking at major oil companies which are diversifying into renewables and other forms of energy, so that they're effectively becoming, instead of being oil companies, they are diversified energy companies. And one such, which I think is a benchmark in this area, is Total SA of France. And as it happens, James, at the Master Investor Show 2018, which takes place tomorrow, I mean, most people will be watching this video after the event has already taken place, we have a senior executive from Total coming to talk about exactly this subject.
That's right. What are you writing about next month, Victor?
Aha! Next month I'm tackling a big theme, which is that we've seen bloodbath on the British High Street. Carpetright, Toys R Us, Prezzo, Malins, they've gone, they're down, kaput. Is there any future in bricks and mortar retail at all? And by the way, even the shopping malls are in trouble. So this is the question I'm posing next month.
Okay. Is there any future in the British High Street? We'll find out next month. That's all from us this month. You can read the entire magazine back to back at masterinvestor.co.uk. I'll be back next month. Thanks for watching.